Hey, what's up everybody? Welcome to the Average Joe Dividends YouTube channel. In this video, I did the stock picking. I deposited $100 and I picked 5 different stocks to invest into, so that's $20 per stock. And what we're looking at right now, this is my M1 taxable stock brokerage account, my Average Joe Dividends portfolio. We can see we're up to over $258,000, so we are up to a new all-time high. We can see just over the past year the portfolio is up over 21%, and you can see we've dipped below that $200,000 mark, but we've just made a slow march up through the $200,000 mark and up and beyond. We can see some low points at 228, and then we had some high points at 257, but today we're at all-time highs. And it wasn't long ago where people were just talking about the stock market crashing, and we can see a quick recovery. And I know it's tough when you are in these bottoms here in the stock markets. It's hard to live within those times, and you can think of doomsday and things like that, but this is actually the best time to be investing, in my opinion, is when we're in a downward trend. But it's also not a good idea to try to time the markets, because you just don't know where the low point is and where the next high point is. And what the stock market just continues to do is go on to new all-time highs. Of course, there's gaps in between those new all-time highs, but we don't know when they're going to be. So what I do is I consistently just put money into my brokerage account. I also have a 401k, and I am constantly investing for my future, and I'm not trying to time the market. I just set a schedule and I stick to it no matter what the market is doing, and it has worked out for me. And a lot of studies have shown that just dollar cost averaging into the market is the way to go. So without further ado, we're going to see where that money went to. We're going to go into the activity log, and we'll see here's my deposit. Last night I transferred over the $100 and I did my picks. And again, earlier in the weeks, like in the Monday, Tuesdays, what I do is I put $100 in as well, and I let M1 do the picking based on my allocations. And we'll click here to see what those 5 buys were. And we can see here, first up was BST, $20, SCHD, $20, and then Fifth Third, $20, and ADP, $20, and then Merck. So those are the 5 picks that I did, but we're not done yet. I'm going to show you what this did to my dividend income, because I'm buying portions of shares here, and this is going to increase my dividend income. So we're going to go over to my Google Docs spreadsheet, and we're going to see what my investments are. I'll leave a link below too to my M1 pies as well, so you can see what I'm invested in, as well as the percent allocation into each of those positions. And there are 52 different stocks in my portfolio, the largest being SCHD, and then BST, you can see, and so on. I'll just kind of scroll through really quickly, and these are going to be represented in my Google Docs spreadsheet, which I'll also leave a link in the description below too, so you can see exactly what's in the portfolio. And we'll go back to the Google Docs spreadsheet. This shows everything in the portfolio. You can see the company ticker symbol, the current share price using a simple Google Finance function. To pull that, here's the average share price. This is pulling a VLOOKUP from the M1 data tab. And what I'm going to do in a few minutes is I'm going to paste some data from M1 from this tab, from the holdings tab actually, and it's going to update 3 different things. It's going to update my average share price, my number of shares, my cost basis for those 5 different positions where I bought more fractional shares of. So you can see the number of shares, the market value, my cost basis, my gain or loss. You can see with like Microsoft here on the top, I've done quite well, a 74.5% gain. on this. And the reason why Microsoft is on the top is because everything is arranged by the pay date. We're going to scroll down here and we'll see my August payers so far. And just in the month of August so far, I've received $158.12. So not only are these stocks appreciating, they're also paying me income at the same time. And I like to track that, of course. With my channel being called Average Joe Dividends, we do focus a lot on this, but there's also a good gain with these stocks as well. So not only is it income, but I could sell these as a a gain on the stock appreciation. For KKR, for example, my average share price is $51, but the share price now is $119. You can see I've more than doubled my money in paper, but it also pays a small dividend as well. And KKR, you can see, is also increasing their dividend year over year, and they've been doing that for a little while. And some stocks have been doing it for decades upon decades. So we can see here, the dividends paid, the total dividends that each investment has paid me, and also the increase that they've also paid and the month in which they've done it. So a lot of people will look at a stock and see what it's paying today as far as their dividend, but over time, like a JP Morgan, they increased their dividend by 10% last time. So if you can picture some of these companies increasing their dividend year over year over year, your yield on cost is going to go up. And it's not going to pay that same 2% dividend yield. It's going to go up as long as you're choosing stocks that pay an ever-increasing dividend. So I'm going to scroll down here and show you some other things this sheet shows as well. You can see the market value. Currently, here's my cost basis. Here's my gain within this portfolio. In this portfolio, this is 15% of my total net worth. I'm mostly invested in boring ETFs. They're like VU and VTI, and I'll get into that a little bit later. But this portfolio is doing quite well on its own, just as a dividend stock portfolio. You can see here's the current yield of the portfolio, the average yield on my cost. Here's what this portfolio is paying quarterly, and I've put here in the table. Here's what it's paying monthly. Here's the quarterly again, and annually. And you can see I have these numbers here to the side because these are going to change, as well as the positions where I bought more shares in, or fractional shares of SCHD, Merck, Fifth Third, and BST. And then the final one was ADP. So we're going to see these go up just by a little bit. And so I'm going to go ahead and I'm going to grab that data from M1 before it times out. Starting from the name column in the holdings tab, what I do is I grab this data and I do a simple copy. We're going to do a paste into my Google Docs spreadsheet, and it's going to update the number of shares, the average share price, and the cost basis, which is over here on this sheet too. So over to the M1 data tab, pay special, values only. You can see SCHD, it changed the number of shares, cost basis, and average, and it did it for the other 4 stocks where I bought more fractional shares into. We're going to go over to the dividend portfolio. We're going to see some of those values have changed. For example, SCHD 969.38, that would be the dividend if SCHD remained with their 82 cents. We know they're not, but it's going to be bumped up to 969.58, so it adds 20 cents to the next dividend. And we can see Merck 925 would be the dividend there, and it's going to be 938. And then Fifth Third 1777, it's going to be bumped up to 1794 next time it pays. And we can see here with BST, the 485.35 is going to be 485.50. And then finally with ADP, the 391 in October 2nd is going to be bumped up to 401 now. So we've crossed the $4 threshold with ADP. And let's take a look at the monthly, quarterly, an annual dividend here, where now it's going to be from $1,544 per month to $1,579. And you can see the quarterly and annuals have gone up as well. So we're going to take the monthly one, though, the $1,579, and we're going to track that over on the monthly average dividend tracking tab. I'm going to scroll all the way down here. We have quite a few entries. So is $1,579 is the new monthly average dividend, and that was because of the $100 deposit. So that $100 added on top of the dividend income an additional 35 cents, and that's not a one-time, that's every month going forward. These changes just keep stacking on top of, kind of like our inflation, how we've had inflation X percent. Well, it stacks on top of the prices already. So this is kind of doing that as well, but it's doing it income-wise every single month, every quarter, every year. It's adding to it. And you can see it's by deposits, it's by dividend drips, and sometimes I have both of them going on with dividend drips and deposits. And then here's a dividend increase. Illinois Toolworks had a 7% dividend increase, and you can see like Union Pacific did the same thing, more drips, and Duke raised their dividend. So I'm getting these constantly with just a new line item, just changing the monthly income, and it's heading in an upwards direction. You can see here, and that's why I track that, is to show that progress. So let's go over to my Dividend Tracker tab. I've been doing these videos since January 2021. You can see the starting portfolio value and the dividends paid in January 2021. I also track the quarterly progress, the quarter-on-quarter increase in percent and by dollars, and tracking annual dividends as well. Let's scroll down to 2024 here. We can see in 2023 here are the dividends received, $10,000. Let's look at the dividends just received so far in 2024. I've received $63.94.73, and we're not even done with August yet, and there's a lot more dividends coming. So we can see over here, here's the average monthly dividend. We're at $1,579. I've increased my monthly average dividend by $6.85 just in August alone, for a 0.69% month-over-month gain. We can see we're over the $12,000 mark in annual dividends. We've increased the annual dividends by $82.16, and deposits are now at $600 for the month. We'll see if I keep doing the $200 per week. I'm planning in 2025 to actually just reinvest dividends only, and we're still going to see the dividends increase though as well, because of the drip and the increases by these companies in their dividends, and it's going to still go up and up even without my own money going into the portfolio. You can see here just with the dividends paid so far in 2024, that's $63.94.73 in drips. So on top of the deposits, on top of those dividend increases, you can see how that snowball can quickly form. So to close out this video, I'm just going to go over my total net worth statement here, and it's pretty much automated, where it's pulling the ticker symbol, and I have to put in the shares that I have at my respective accounts at Vanguard, where I have an IRA, Roth brokerage account, and a taxable stock brokerage account. And you can see it's in boring index, ETFs here, with VTI and VU, things like that, VTSAX, total stock market indexes, boring things like that. My current employer here, 401k, is in a S&P 500 fund. And you can see I have an M1 IRA as well. More boring ETFs over here. Here's the dividend portfolio that we covered at length. And then here's an emergency fund over at M1. And it's paying a 5% interest rates, and then Synchrony is paying 4.65%. I have $50,000. It's kind of a nice round even number. And of course, when the interest payment pays, it's going to go up, and that's pretty much a year's worth of my expenses right now. And then Capital One, this is more short-term savings, more paying my mortgage, things like that, and just having a little cushion in there, a couple months of expenses. Here's my home value. Here is my liabilities with the current balance on my credit card, but I don't carry a balance. I pay it off every month in full. But here's my major debt, if you want to call it, in mortgage right now. I want to get this paid off in the next 2-3 years for sure. And right now that mortgage balance is at just over $180,000. And my net worth just pretty much a little over $500 shy of that $1.7 million mark. And then here is the breakdown of it. Very heavy in stocks, and then a little bit in home equity as well as cash. And here's the breakup for in 401k IRAs here, 60% pretty much, and then I have 40% in after tax or in home equity at the 40%. And the breakup is 96% US and 4% international. So that's all I had to show you guys, and I'll go back to the activity log and we can see what those 5 companies were. Of course, what I'm buying is not investment advice. I'm just chronicling my journey and showing you guys what I'm investing in, how this portfolio is growing, how my net worth is growing, and kind of how I'm doing it. And thanks for sticking to the end of this video. If you got value from the video, please click the like button. Also subscribe so you do not miss future videos. And let me know in the comments below what you think of these picks, and also let me know what you guys are buying. I'm also interested in seeing how you guys are doing and what you guys are buying to better your futures. So thanks again. You guys have a great weekend.